Today we're going to look at how to set stops using a fantastic tool that isn't necessarily well known by many people, and in fact in many trading platforms it is either a premium element or one that's hidden behind the scenes because it's generally considered a professional tool, although it's gaining much more notoriety as of late, and I've done several videos and have a course on it. As a matter of fact, it's called Volume Profile. So we're going to look at setting stops with volume profile. So let's first talk about how you would traditionally set stops. And I'm going to use an example that came up just the past couple of days. It was a breakout trade with natural gas futures. And the price had come down like this and did something like this. All right. And our system said that, hey, it looks like there's going to be a breakout right at this level and a target at about this level up here. So this would be the entry. And there's the target. Problem is, most people want to know, well, where do you set a stop? And in traditional technical analysis, you would likely look at something like this and say, well, there appears to be a channel here, something like this, or maybe it's up here, I don't know. It's one of those two. And we'd set a stop maybe here, or just below here, or just below here. It's kind of arbitrary. The problem with this is that, especially with a futures contract like natural gas, that little difference there represents perhaps a couple $1,000s. And so you want to be pretty sure about where you think you have a best chance of placing that stop. And regardless of whether or not it's a high-flying futures contract or an ETF that might not have the same kind of risk, or maybe you choose a micro contract that reduces the risks or whatever, you want to be able to place that stop where you have a high degree of confidence. And doing it the arbitrary way of placing trend lines that don't necessarily gauge exactly where the market's intent, where the market finds value and where it does not find value, is really a suboptimal way of doing it. So what I would suggest is that you look at volume profile. And so what we're going to do is exactly that. So here we are with, again, natural gas, the natural gas futures contract. This is a 4-hour chart, 4-hour bars. Each bar is 4 hours of time. And you can see natural gas has come down to settle in on an area right here. And on the right-hand side, we see the volume profile for this visible region of the chart. And you can see that right where all this action is, where we are now, there's a huge volume node showing that the market has decided that there's incredible value in this area. It feels really comfortable, and not just in this price action here, but also in previous price actions back here. So the question then becomes, well, where do I set my stop? If we were to take traditional technical analysis, you might do something, I don't know, you could draw a trend line like this. You could claim somehow that you're connecting the dots down here and perhaps doing something like this. There's another, see, I'm taking the wicks, they come down and they touch this, and I say, okay, well, that may be, so where do I place the stop? Right under there? Where is a good place to place this stop? It becomes almost unknown. Some people might look at this as a channel, and so perhaps that's what we do. We draw a channel in here and try to connect these dots, and then say that it should be just below the channel. But should it be down here or up here? Again, unknown. That's a big difference between there and there, especially when we consider that from a dollar move in natural gas is equivalent to $42,000. So a 10-cent move is $4,200. The ATR currently is at about 2 cents. So still we're talking about $800 or so for each daily move on the that's the average range within any 4-hour period is $800. So wherever we set that stop, it has to be pretty meaningful, and it has to be something that has objective evidence. And the most objective evidence that you can see in this chart is the volume profile. There, the market has told you where it thinks there's value and where there is not value. So what we can do is identify the edge of that huge volume node, which is right about there. And there is a very objective place where we would say, okay, there is resistance there. Now, we don't want to set our stop right on that or right below it. We want to take into account at least the average true range for each one of these bars. And right there at that point, it's about a little over 2 cents, 0.022. So what I would do then in that case is duplicate that line, and we'll set the stop at about 0.22 below there. So currently this guy here is at 2.656. So maybe set this one at 636, like right about there. Now there's an objective place to put the stop. So now on this breakout move, this is actually an actual trade that we had. We had a breakout that said it was going to be right above this area. And we know that from my past volume profile videos in my course, we know that when we enter a big volume well like this, if we break into that area, there's one of two things that will happen. Either it will jump and run right through that big volume well. I mean, there was a tremendous upside here. It could have gone all the way up to 2.8. Or it will find resistance and get rejected. And in this case, it got rejected. Now, that doesn't mean that the trade is necessarily over, but I want to be able to protect myself on the off chance that it's not going to return here and maybe come down here. All right? As long as it stays inside this value area, I think there's still a good chance for it to come back up, at least to reach break even or to continue the breakout. It's already tried to break through here a couple of times. So this is the thesis for around this particular trade. So here is where I find resistance, right on the edge of the profile. And then I'll use one ATR, and we talked about the ATR in a previous video, as taking into account any of the daily noise that could potentially happen. And we can already see right now that there was a small wick that came out here. Well, how do you explain this guy here, Ernie? Well, that's kind of an anomaly. And, I suppose you could set your stop below here. But that seems to be an edge case, as there's very, very little volume associated with that move. Most of the volume is within here, so we can feel very comfortable about using this line. Now, in traditional technical analysis, that little dip down here might have as much strength as any of these up here, and you might make a false, or just put a way too big of a stop, and chance losing a lot more money should it come down and hit that stop, which would be here plus one ATR down here somewhere. So again, volume profile. By looking for the edges of volume profile, we find very objective places where the market either finds value or doesn't find value. And those are the areas that define support and resistance, not some arbitrary trend lines. Let's go back. And one thing you may notice, much higher def camera today. We pulled out the 4K camera. Setting stops with volume profile. Using the ATR, and then use the ATR to account for noise. And then set it below +1 or -1 ATR. All right, we'll see you next video.